Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording at 4:20, just after the close on February 28th, the last day of February, Barry.
Well, here we are.
Here we are.
What a month. What a month.
What a month. We had a year and a month. My name's Ben Maldonado, and my partner that was just speaking is Barry Hederachi, and we are today going to basically just tell you we were right, and then that's the show.
There we go.
No, no.
Short month, short show.
Right. No, we were right, but we want to talk about, okay, where do we go from here? What do you
Mhm.
do? How do you handle it? What are the different markets looking like? But there were major, major changes that occurred this week, and we are going to talk about them. So
Mhm.
let's start with the S&P.
Here's the cash. And it really doesn't matter what the market does. Every week, we pretty much have to do the same thing, which is really get back to the technicals and look at the charts and see what's happening and see what's
Mhm.
emerging and sort of whatever's unfolding next.
But it sure
Right?
helps to have those kick-ass levels. I mean, look at that. Look at the low today.
Yeah, pretty good, huh?
Awesome.
58.48 right
Yep.
there.
Yep.
And well, that's a good place to pick up because last week we talked about 60/20 and how there's really nothing between 60/20 and 58.48. And we laughed about it and said, well, it kind of sounds crazy when you talk about it, but these things happen. And sure enough, come Friday, we tagged that this morning with a rebound to go up and kiss this trend line that it broke from below. So that's happening. Well, if you guys have been watching us every week, then you know the story up until here. We talked about the false break in the cash market, and following that false break, we were looking for some kind of a fast move, which we got. First one was down to 60/20, and then failing that, couldn't really get above it, kind of stalled out. And the next stop was 58.48. Now, if that were to go, then 57.50, 56.73 level becomes the next level of support. So
Mhm.
far, no matter how scary that looks or whatnot, it just seems like a decent correction, decent first leg down. And if you take it from, I mean, we'll look at different charts, but if you just take it from the October low, it's still, market's in pretty good firm ground here, about 57.50. It's
Mhm.
really breaking that. That's going to really change the psychology. So that's 270 degrees up from the October lows, September lows, September, October lows. Last thing we talked about a couple of weeks ago was the square that happened where the dash lines cross. And it's after that we got the false break and the move down. For next week, so we're just looking at the cash numbers. We are between the 58.48 and 60/20 level. So we're looking to see if we're going to go higher before we reverse. I mean, really, what are we looking for here? We basically came straight down one day counter trend. We want to see what this next counter trend looks like. Today is basically down day, even though we rallied at the
We
end.
closed up, yeah.
Yeah, we closed up. It's if you look at the bars. So we want to see what the next counter trend, next bar looks like. If it's a counter trend, we would get 1 or 2 days or 3 days or however it lines up. So that's the main focus. 60/20 obviously is still resistance, and 58.48 is support. And in between, this is based the daily. I mean, we'll get down even to the 30-minute level and look at the key numbers there. So for now, really on the daily, it really doesn't make any sense to give any numbers in between because you can see how easily the market sort of glides into these levels. Let's take a quick look at the Dow before we jump. So the Dow, this was a zone. If you guys are long-term for the viewer, we talked about this zone, and 43,723 was the lower boundary. And we talked about how, a couple of weeks ago or last week, once this triangle broke, we talked about how the market would come up, push up into the center of that zone and fail. And that's where the resistance is. So that's right around let's say 44.20. So we're just under that. You see this week, right?
Hmm.
All the highs were right below that. And we're obviously we have a little bit of an expanding triangle working. So this thing could get a little ugly before it's all before it's all said and done. The key now is, if the Dow gets stuck below this 43,723 level, then obviously it's going to be pointing towards weaker conditions and a test of this 216, which happens to be around 42,500, let's say, just to make it easy.
Mm-hmm.
So that's the level down. And the upper boundary for countertrend would be 44,300, which gets us pretty much up into the triangle break. And the trend line coming off of that. This triangle break was a good one for the Dow. So it seems like, here's the first break. Now let's, again, it's time for counter trends, just like in the grains and everything else, Ben,
Mm-hmm.
that you're
Yeah,
watching.
absolutely.
So now we have to watch, we got the break. Now we'll watch the counter trend and trade accordingly. And you guys now know the levels, and you really want to kind of find the midpoint of that, So anything lower than that, it's weak. If it gets above that midpoint, then 44,300 is really the level. So we'll work with that. And obviously there's a trend line you can draw here, and you can work with that. What else do we have? This is the calendar chart. Not much other than, we talked about this 270 degrees up from the October low. We talked about this. Well, we talked about it a couple of times, but let me find, here we go. This is just a March contract. And the key level here to watch, we talked about it last week, was this 59.40 level, which is 90 degrees up from the August low. And this is the one that tipped us off to the high.
Mm-hmm.
That was a 90-day run into the high. And after that, we had all this, what we kept saying, it really looks like distribution. And eventually, we did a false break against a high in January, and that's when we sort of let it all go. So going into next week, basis the daily, you want to watch this 59.40 to see if we're settling above it or if we're settling below that. Sure, the counter trends or whatever that's going to happen next week. If we take out today's high, and we'll have to see how that reverses. Speaking from a perspective of that the high is in place, and we're looking on the short side, right? We're looking for the
Mm-hmm.
counter trends because the lows didn't exactly square out in anything in any grand fashion. We didn't even get to the trend line, and the low seems to be kind of hanging there, if you notice.
Yes.
You know,
Yeah.
there is a trend line we can draw here, but it didn't. And we do have, I think, I'll show you guys that we have a 45-degree line. I think it's 45 degrees from this low to low, which
Mm-hmm.
could give us a little bit of a bounce. So we want to watch the counter trends very carefully. So for next week, this 59.40 level you want to watch, see if you're above or below. That's sort of a balance point. And this is coming off of the September low, September, October lows.
Mm-hmm.
And here the level becomes 57.50. Well, 57.51 there, 57, yeah, 57.40, 57.50, 51. This zone is the level to hold or not. 57.51, yeah, this is the range to watch. Anything above that, yeah, it could be more of a corrective in nature. So we have to also look at that side of the coin. In the meantime, while it's doing that, we're looking for the price action to show us if there's going to be counter trend. So 270 up from the September, October lows is the key level. The upper boundary was 6,100, and that's the 50% of the upper square. What else? Well, we completed the ABCD. All of that happened, and we talked about that for weeks and weeks. Eventually, we got the break,
Mm-hmm.
and now we're basically on counter trend mode. So that's kind of what I have for the daily. Not a whole lot to talk about when things are moving. Let's take a look at the weekly. So this is the cash going off of the 2009 low. It's a square of the low. And we had price and time come up into here, and I had drawn this little shaded area, meaning that could be a sort of an inflection point. And we had this big old ABCD coming off the 2020 low, and
Mm-hmm.
all of it sort of culminated here. And we spent, I don't think it was the last one, a couple of weeks back, we spent a little bit of time looking at how weekly highs come in and how quickly these things change the direction. Well, weeklies, it takes a little time unless it's a crash. So you have to be patient to see how the market moves away from the highs. So that's for the weekly cash. I think that's the important level. Here's the weekly the futures market, weekly ES. And here again, same ABCD came up and we were waiting for some kind of a break. Remember, this is a weekly. So here 5,800 is the key level to watch. I think anything above that, we have to treat it as some kind of a correction, and the market's totally bullish and everything's fairly healthy above that level. So when I say that, we're really looking at that level to be support. And does that mean we're not going to short the counter trends? No, it means we're going to short it. But we want to watch this as a marker to see if price takes it out or not. That makes sense, Ben? Okay.
Yeah. In other words, if you're short and it struggles there, cover.
Yeah, exactly. And the other side of the coin is if we get below and can't quite get above it, then we might have a lot more to unfold.
Right. Then
Right.
the a panic could kick in.
So yeah, so the key thing here is if price is going to be stuck below that level or not. If it gets below, I think the thing to remember is if it gets below, then we'll have a lot more to go. Probably get
Yeah.
down to, the 50, 75, this area,
Yep.
which is 180 degrees up from the 2020 lows. So that's a
Hmm.
long way, obviously. And like I said, long as we're above this 5,800, 5,806, 05 level, it's in pretty good shape. And this could be just sort of a normal correction. Is it a normal correction or could it have other things happening, right? That's the other question. Is this normal? Wouldn't that be sort of the question to ask? And I would say looking at the weekly, this is another weekly chart. This is the weekly cash. We've been watching this for a while. We were up 240 degrees, so 240 by 240 squared out right about there, very close to the high. And the fact that we really couldn't settle above 240 is the key there, right? The 6,050 or so. And eventually, like if you look at today, this week was basically below that level, you know,
Yes.
for the first time. I think this is big news. So we got to watch,
Yeah.
So the other side of the coin is the weakness of all this is going to show up if we can settle above the 60-50 level, basis the weekly chart. So we talked about the downside. This is the upside on the weekly, looking at it from the 2020 low. This 60-50 is really important. And the next stop on the downside would be 55, well, 55.60. That's
Hmm.
where that lines up. So that's the bracket for the weekly. And it looks like, I mean, the difference here is we didn't somehow grind and settle above this 240. You see, what happened was grind, and we kind of failed. So that has to tell us something, right? It's the opposite of going up. We went down. And with all the cycles that expired, this 240 week cycle squaring out, we have to think in the long term, like you said, are we moving into a bear market?
Yeah.
And if that's happening, we'll know it soon enough. For now, what we know is, well, it's not making highs and looks like the cycle ended. So we're just looking for further. Our focus is mostly short term, so we're not really concerned what's going to happen in 6 months. Rather, that's why it's a weekly show, right?
Right.
We're pretty short term oriented. So we'll see. Every week we'll have more information. But so far, just looking out into the horizon, it looks like it has the sort of the colors and the feel of the longer term downturn.
A
So I think
shift.
a
Yeah.
shift, yeah, yep. And we talked about the shift and all the big cycles that came in December. Well, during the December show, maybe late November, right in there. So
Hmm.
if you guys want to check them out, it's in the archive. So yeah, so that's kind of I wanted to kind of frame all of this. Otherwise, it's kind of useless. What are we talking about here?
And I think, Barry,
Um,
one of the key things too is to remember the process, right? We identify the cycle and then we say, okay, now we have to see the price action that's either going to confirm or deny it.
Hmm. Absolutely.
And what we're getting now, especially this week, is evidence that confirms that that was the major highs that the cycles were calling for are starting to play out.
Exactly. We're getting evidence finally, right?
That's
So,
correct. The price action is
mhm.
evidence. Yep.
And ever since this high came in, which was this 90 run, I mean, first we had, really beautiful drop, lower high, and we went lower. I mean, we went, it was a pretty good run down, but it really didn't square out in a big way. And that's why we were still waiting to see like, oh, well, that didn't seem right. And we kept talking about how if the high is still in place, we have to treat it as such. And, there's no other reason to get all bullish here. So, and we kind of stuck to our guns and kept pointing to where the high came in. And so eventually now we got another break. But like I said, we're still in that bracket. We're not in any kind of a unsafe zone, like the basis of the weekly charts we just looked at. But it's getting closer than it was a week ago. So that's the idea. Now, for the futures market, you really want to watch this 59.40, 59.42 level because that's 90 degrees up. 59, let's say 59.41 plus or
Hmm.
minus the point. If we
Hmm.
can get above that Monday and hold above, sure, we might have a little bit of a stronger counter
Bigger
trend.
rally. Yeah.
Uh-huh.
Bigger counter
And
trend.
and somehow we can't, we slip and we start to hang out below that. Well, that's a sure sign something's not quite right. So we want to watch that.
Hmm.
We've been able to pull up very strongly from this area before, and we can see why from looking at the weekly charts and other things. So, but what's happening next week, something interesting is coming up. So we're 45 degrees low to low, coming into this low, and we're going to be 90 come next Monday. Is it Monday? March 4th, right? March
Hmm.
4th, Tuesday, from the high in December. Actually, yeah. So it's right around Monday, Tuesday. You want to watch that because no matter what, we have if we make a lower low, that's a 90-degree move from high to low, however we did it. And this 45 low to low, normally 45's low to low could give us a good pop. So keep that in mind because we are kind of in counter trend mode and this is telling us that a good counter trend could be starting here, right? Because of the 45-day count, degree
Hmm.
count. All right.
Hmm.
Let's take a quick look at the 30-minute, which looks amazing because of all the gyrations. Basically, our levels all worked out. We were looking at 15. First of all, it was 60.32, breaking below that. Before that, it was level up here. So once we got below 60.32, really, really couldn't even get close to it. We were just weak altogether. And taking out 59.86 was even weaker. I mean, the first time we took it out, we ended up around 59.41. We managed to hold that for a couple of days, went back up to test it, failed. And on that failure, we went right through 59.41 down to 58.96. And I thought we are probably going to get to 58.50, but we didn't quite on that first run. But then, after another trial, 59.17 area held. And then the drop is today, we went down to 58.50, false break,
Hmm.
and a hell of a rip coming off of that, which we also talked about this morning, right? If you expect some kind of a rip if this fails. So we came up and settled well above 40, 59.41, which is impressive, right? So I think for next week, if you guys want to look at the short-term levels, we want to see if we can hold about 59.17, 59.20. That's kind of the area you want to watch. And if that's the case, okay, it's somewhat positive. And obviously above 59.41, the market is very strong. So somewhere in here is in kind of an intraday pullback we want to see, and to see if the counter trend continues. Flip side, if we get back under 59.40 and we stall, that's obviously negative, right? We don't want
Hmm.
to deal with that. Well, we don't want to deal with it, meaning we don't want to. I don't think the bulls would want to deal with that.
You don't want to be long
You
and
don't want
have
to be
to deal
long.
with that.
And obviously, if we get below 59.17, then we have, we're going to go back and test 50 at 50. So this level is very key to watch because if we break that, probably going to go lower. So we got to watch. This zone is going to be really important next week. So that's it for the S&P. That's a full run up, man, from the 30 minutes all the way to the weekly.
Hmm.
Right? Yep.
That's good. And everybody's got the levels.
Everybody's got the levels. Okay. Let's move on to bonds. We're okay with the index S&P and all of that.
Yep.
Yeah. Okay. And you're doing the NASDAQ, so we
Hmm.
covered full coverage. Moving on to bonds. We took out the 45, and as expected, we're moving higher. It looks like we're going up into the 119.16 or 119 and a half area up here where the ABCD ends, and looks like it's on its way. So let's leave it alone up until it gets there. Looks like the trend should continue. I don't think much more has to be said there. And if you look at the weekly, 144 down from the high in 2020, comes in about 1920, 1916, 18. So it's in that range. So that's where
Hmm.
we're looking for resistance. And yeah, it looks like a good correction. Let's move on to crude. Crude, well, we came into lower lows. It's very quiet, sort of a creep down. 64.75 is really good support. It's 60 degrees down from the high. And here the support was structural. We're in the middle of the consolidation. So, but the trend is down. So I don't think crude's quite done doing whatever it's doing. And we've talked about the 61 area, this area here. We talked about that it being a good idea for that to be tested before any big move to the upside. So, and it looks like it's working its way down. So we'll watch
Hmm.
it. We'll watch it, see. And on the weekly, boy, no breaks here, huh? Just we're back to the same grind. We're
Yeah,
trying, but yeah, go ahead.
it's just sideways.
Yeah, not much to do, but we know where the support is, and boy, one more false break would be great. So
Yeah.
we're waiting for that for the run. Otherwise, it's just sort of grinding.
Hmm.
Not much action here. There are other places. All right, gold. Um, Number of ways to look at this, but I think the easiest is to square that bend that you brought up the other day.
Yeah.
It's 45 up, 90. I mean 90 up, 45 days, and looks like it's squared out. It's correcting,
Yep.
and long as it's above 28, 27, it's in pretty good shape. It's pretty close to 1/3 correction, and which is a pretty healthy correction in a bull market.
I mean, even if we
50,
came down to the half square, it would still
yeah,
be
which
good.
is 27.80,
Hmm.
still very good. Yeah, so I think let the correction finish. I mean, last correction was this big triangulation, had a nice run off of that. So this one might not triangulate, but looks like it's not quite done either. But it's very close. It's very close to the 1/3 of the square
Hmm.
and the 28, 27. So let's have it finish up and see where it goes from there.
We did a weekly outside reversal too.
Let's take a look at that.
Hmm.
There we go.
Just poked
Well,
at the
mhm,
high. Hmm.
yeah. And I think last week talked about this 120 week high, 120 week run. So, and we did square out at the 1/3 of the square. So this could be, somewhat of a significant high. So we got to keep
Yep.
that in mind, but we're
We have
watching
to
those
watch it.
levels. Yep, we're watching the levels we talked about on the daily for the first sort of the signs of weakness, and basis the weekly 27.97 is sort of a good level to watch. And that's a zone we want to see it correct to. It's going to continue on. So there's plenty of room for that, plenty of room for that to be wrap up. So we'll wait for that.
Hmm.
Still, well, we're still in a big triangle. We're kind of wrapped around this 90. Clearly weaker now that we're below the 90 degrees, which is 32. So what can we expect? Well, we can expect it to correct all the way down to 30, 30, 75, 30,
Hmm.
50, close to this triangle, the lower part of the triangle, and you can see how that works out. So looking at both, it looks like they have more to go to the
Yep.
downside. Go ahead.
Agreed.
Moving on to copper. Copper is holding the 50% level pretty well,
It is.
right? Yeah. So this 453 level is holding, and I would say, even if we dip a little bit below, like 448, long as we can hold this structural support right in here, is ready to move higher. And it was bullish. We called the lows every time it came down to the 60-degree line, ran up. If we can hold above it, it's very bullish, and I think we can go up and challenge the highs in May. Around $5, over $5. If we can hold this, it looks like it wants to. So it looks very bullish, and we've been bullish copper. Gosh, what since since these lows came in.
Mm-hmm.
And after the correction, after this big 216-week high, I think, or
Mm-hmm.
whatever that was. So it looks good. It's good. A little bit of a rough start, but these kind of sideways can produce really sharp moves, and this could be the start of that. So let's see what happens after that consolidation. Looking at the copper weekly copper, the stalling was, and the false break was at the 50% level on the weekly chart, 479. I mean, looking at this, we're definitely at the upper boundary of this consolidation, so it's in pretty good shape. Yeah, I mean, 144 is at 423, and we're at 456. I think copper's in pretty good shape long term,
Mm-hmm.
and let's watch those dailies, and we can get those pretty tight bracket. What else we got? Okay, let's take a look at the dollar. Well, the dollar is this counter trend is, well, today, so we're stuck at the 60-degree level.
Pretty
It's
important
one,
spot.
yeah, a very important spot. We drew a little box in here. If we can settle above it, then the dollar is going to continue on, and this correction is over. And if not, let's see what we do here. As long as we're below this, it's a little bit weaker, and we want to be above the 60-degree level, which is about 107.75. So 107 and a quarter, 3/4 it's a level we want to watch here. If we can clear that and settle, I think then we can make another run and take out these highs around 110. Bullish on the dollar once we take that level out. Up until then, we want to wait a little bit to see, let the correction work out.
Mm-hmm.
Makes sense, right?
For sure.
It's about a half a square right now. Let me see. Oh yeah, we looked at this
Oh, and squared
yeah,
out. Yeah.
yeah, we looked at this last week. So we had that 30
Mm-hmm.
by 30, and we were looking for some kind of a bounce off of that. So there's that. So we're good.
Mm-hmm.
And long as soon as we clear the 725 level, 750, I think we could start picking up some momentum to the upside. Looks good. Looks good. Dollar weekly, sure enough, we found support at the 50% level, which we talked about last week. And yeah, because we talked about the 30 by 30, right? The square and this together, and talked about how the weekly support level is sort of confirmed with that 30-30 on the daily. So following that, we managed to rally, and the upside looks good. Lots of room to go. Move all the way up to 110, 110 and a half, where we have some resistance. So, and if we get above that, boy, then we're going to new highs. So it looks like
Mm-hmm.
this pullback was a really important pullback. So we'll have to track it from here. And that 107 and a quarter level, that's where we want to hold above next week. But start watching the dollar. Everything's technically very good. Look at this 50% level, banged up against, fail, fail, fail. Then we tracked it
Sit
here,
on
came,
top. Yeah.
yeah, we broke out, retest. So this is really it. We want to watch it from here going forward, which means the euro is sort of starting to get a little weak.
That's correct.
Yeah, didn't even get quite to the ABCD, and we're starting to slip below the 90. So this is really not good news.
No, the 90 is
Although,
key.
yeah,
That
90
90's.
is, yeah,
Yep.
90 is really important. And, we talked about this overhead that it has to deal with, and we weren't really expecting a big run here. And I think last time we talked about this ABCD being a proper place because it's going right up into the overhead that's already there.
Mm-hmm.
And sure enough, the weakness, we couldn't even quite get there. Turned around, slipping below 90. and that's about 39.36. Well, if we can't get above that, you know where we're going lower. So, and the dollar looks like it's poised to go higher. This looks like we're done our business here. So you guys know which way to trade.
Indeed.
Good stuff. A lot of volatility. A lot of good stuff to trade lately. So here's the weekly euro. We talked about the 50% level, how we basis the weekly anyway. We want to really settle on one side or the other. So we haven't quite done it, but we do have we had an inside week, outside reversal sort of a week this week.
Hmm.
So it looks like we're headed lower. At least basis the weekly. Watch this 42.64 level, and we can key off of that on the bigger time frames, right? So, and for the daily, this is the level we got the 90. We talked about that. That's it for the main set. Let's take a at the look at the Hang Seng.
Some fireworks there.
Fireworks here. Well, you know what happened was we were looking at this 144 being the next.
144. Yeah.
Mhm. We went up and tapped that 23,878, and even a little bit above and reverse. So this was expected, right? That's resistance, and we talked about that being resistance. And now let's see how the counter trend goes. So 22,709 is the old resistance. So if we can hold above that, that's very bullish. I mean, I can't tell you how bullish that is.
Hmm.
So,
Hmm.
and the run up was not bad. We had 36-day run, which is pretty not bad. And so the key is if we can hold above this 22,709, we're in really good shape. The next level down is 21,534. Even if we get down here, of course, it'll be a bit of a longer correction, and it'll be great for those trading, stocks in Hong Kong. If it gets down here, great. Otherwise, this 22,000 level being held is very positive. I think it's just getting started. Looks good. That's what I have for
Excellent.
this week. All right, Ben, you already have the ABCD drawn in.
Yes, we did hit that today at the low.
Mm-hmm.
And but the key thing to look at is the levels, right? The price levels. 21,366 was the area that we said we had to watch last week. 3 days we pushed and couldn't do it, gave it up and went straight to 50% of the square, which is at 2642.
Mm-hmm.
Completed the ABCD and bounced. Now,
Right.
next week, if we can stay on top of this, then we can push up and test this. If we stay under this, we're going to get pushed down. So the key levels to watch are the 21,366 and the 20,642. Remember too, if the ABCD gives way, like if we take out these lows next week, it should be a pretty fast trip down to this 19,900 level.
Mm-hmm.
That's the key. The key thing that I've been looking at here is we never made a higher high, not even a false break high like we did with the ES and the S&P. So we had the high that came in December. We had a low, we had a lower high, and now we have a lower low. Until this market can start making higher highs and higher lows, the path of least resistance is lower. Anything you want to add on the daily?
Oh, we're good. We're good to go.
Okay, let's take a look at the weekly. The weekly also, penetrated this important 50% of the square right around 21,000. Next week we want to watch. Do the highs get stuck below here? If that's the case, it opens up basically 18,186 on the downside. We'll go down and we'll test this full square.
Yep.
If we crisscross it, then the battle is still on. So we're looking for either a full bar above or a full bar below to give us
Mm-hmm.
clues to the next direction.
Right. Well, it is breaking the trend line. So,
And we broke the 1-by-1 trend line.
mm.
So again, just more evidence stacking up that high is pretty good that's in there.
Mm-hmm.
Here's your monthly. Also got a monthly close since today's the last day of the month. We got a monthly close below the 50% of the square. So next month we want to see do prices stay below Do we get a full bar below? If we do, just like the weekly, that would open up, the price action going down towards the 18,000 level. If we crisscross it, then, we're battling out still. But the high squared out, and now we've got this reversal. So, the high's looking good. And now we're just waiting to see if we have, if the odds shift because we get stuck below here, that we're heading down to 18,000. Anything to add here on the monthly?
No, we're good on the monthly. That reversal's a little bit sticks out a little bit. So we'll see
Yeah.
how that follows.
Yeah. I mean, it was an outside bar, but we already had a down bar last week, but you could see the failure at the high
Mm-hmm.
for the month anyway.
Yep. Yep.
All right, let's take a look at Bitcoin, which had a very interesting week.
Oh boy.
Yeah, so we
Mm-hmm.
lost a couple squares here. Remember last week we were up in this area here? Well,
Yep.
and we were saying, oh boy, we're potentially getting stuck under here. That's not good. That could
Mm-hmm.
create some issues. And of
Mm-hmm.
course, when you get stuck under, you test the 50% of the square, blew right through that, tested the full square below, blew through that, and found
Mm-hmm.
support down here on this 50% of the square around 79,000.
Mm-hmm.
The close looks like we're going to close under 85, so we got to watch it. If we get stuck under 85, the pressure is going to continue to be to the downside. Now, big picture zooming out, as we talked about, we could come all the way down to this full square here at 73,000 and still be bullish.
Right.
So watch the levels. You can see all the levels here that we've traversed this week, but watch this 85.2 and 79.4. Those are going to be the keys next week. Sit on top, we can head back up, get stuck under, we got more to go to the downside. And that's your daily. Here's your weekly. Talked about this last week. We initially came down and tested this here, 89, and held, and that let us push up and gave us that false break. Well, now we just gave way here. And next week we want to see, can price get above this 89.5 level, which it's important because that's a 144. We get stuck below it, the pressure is going to be down to 71. And that's your weekly.
But that 71 looks like it's calling though.
It sure does, doesn't it?
Yep.
It's like pulling it like a
Mm-hmm.
magnet. Let's look at the monthly. The interesting thing about this monthly, remember, and it's more about the circles here. The lesson in the circles. We talked about the circle, how when it hits this curve, you get this ramping move, and then when it
Mm-hmm.
leaves the curve, you break out and you push. But there's still this attraction, and you can see. Look at the lows of the last 3 months, how they got pulled towards the edge of the circle, and this
Mm-hmm.
bar got pulled into the circle back again. The key thing is we got the monthly close below 93. If we get a full bar below here, 74 is next. So I think the weight of the evidence on all time frames is pointing towards the low 70s.
Mm-hmm.
That Bitcoin's just gonna, with the risk off nature of the markets right now, that Bitcoin is going to see pressure into the 70s. How it acts there will tell us an awful lot. Right?
Mm-hmm.
If it can't hold there or slices right through there, we're gonna, then we have to, sort of step back and reassess. Are we going to the 50s here on a monthly
Mm-hmm.
basis?
Mm-hmm.
But it sure feels like there's a magnet pulling towards that way. Anything you want to add here?
No, we're good.
So that's the story with Bitcoin. Uh,
Mm-hmm.
Short term bearish, longer term still bullish as long as we, you know, hold this support or keep the air here between if the low's already in, then that's you know,
Mm-hmm.
air between previous structural resistance. So that's pretty bullish.
Right.
But we'll see.
Yeah.
It's
Yeah.
got a, short term, as long as we're below that 85 280, it's going to be pressure to the downside.
Well, even that 91.50 level is pretty serious looking with all
Yeah.
that overhead now, right?
Yep. Yeah. So it's coming to fruition, much like the market. Like remember we were talking about, hey, the highs are in, but it's not going down.
Right.
So,
Mm-hmm.
just you gotta note that. You gotta be aware of it. You gotta
Hmm.
understand that because that's in the background. That is there.
Hmm.
And this is what we were saying here. We had a square out, we had a false break,
You
but
got
it
three
wasn't
drives.
breaking. Yeah, three drives. It wasn't
Hmm.
breaking down, right?
Hmm.
But that was in the background, and then the pressure and the cycles exerted themselves, and you see what happens.
How classic, right? We had three drives and that little bit of screwing around and then a false break on top of that. Like everything's there.
Yeah,
And then the
yeah.
break.
But people were still, the narrative was, oh, we're going to 150, we're going to 300, we're going to a
Hmm.
million,
Yeah,
and
well,
that's
yeah.
and we'll hit that as the topic today. But let's just
Yeah.
give a quick sort of verbal review of the commodities. Grains are correcting. They've pulled back all of them. Just watching them now. We try and highlight the commodities that are actionable. Let's watch them. They're pulling back. Note your support. Note the important levels that we discussed, and let's see how they act. Before we jump in there. Sugar had a pretty deep pullback. We got to watch that one. It could turn bearish. It could also, if we make another higher low, then we're looking bullish. So we'll watch that and update that as it comes through. Gold, silver, copper, Barrie covered those. He covered crude. Nat gas, we're seeing the sort of same thing. We're seeing a pullback. We had a weekly inside bar. Let's let the corrections play out in these commodities that we like longer term. See where support kicks in, how it handles, these corrections. And these corrections are coming off of things that we noted, like some of the grains we noted square outs. Last week in Nat gas, we noted a square out and a
Hmm.
false break at the high. It's a normal sort of breathing in and breathing out of a trend. And
Hmm.
now we're in that corrective phase. So we'll wait and see what happens, making sure they stay bullish, because they hold support or give us a higher low. And then, we get involved in the next leg up.
Right.
The topic today, Barry, that I wanted to talk about, I alluded to it a little bit with Bitcoin. When you have sort of your cycles come in and your technical work is saying, a turn is at hand or the risk has shifted in the market, how do you deal with the prevailing narratives that are out there, and they're constantly bombarding us? Like, for
Hmm.
example, we talked about Bitcoin. It's going to a million. Michael Saylor just bought more. He's leveraging up, and all the things of like there's no sellers. It's just going to continue to go, and the Mag 7 is dominant.
Hmm.
When your work and our work that we talked about, the Mag 7 specifically, major square outs, major cycles, long-term stuff, weekly, monthly basis. How do you deal with that pressure? Because it is pressure that you feel when you're going against that major narrative.
Hmm. Well, one thing, I mean, this is something we talked about a couple of episodes ago about how, well, about systems, what do you need? You need to go back and test it, test the systems, back test it to see how it works. So you have an understanding of the probabilities. And why do we need that? So we have confidence and we can trust the system, right? So we
Hmm.
know what kind of numbers to expect in the future. So cycles, I kind of have a similar outlook or feeling about that because I know in the past over the years that what works and how it works and how the patterns unfold. So I kind of lean towards that. My leaning is in the technical. And I also know over the years, just watching the news and the narratives and how they change and how they're always something, there's some half the people are justifying what's happening, other half are complaining or however the narratives
Right,
go.
right, right.
So I look at that as a background noise, and some of it might be useful, some of it might not be. And we also talked about, right, some numbers we have to pay attention to, FOMC things we have to pay attention to, because some they can be inflicting points, right?
Yeah, yeah,
Inflection points. And other kind of noises we have to sort of ignore and or see which noises or which narratives are lined up with your technical work and which ones are not. That's another way to do it.
yeah. And it's ironic, but the maximum pressure occurs where, like peer pressure, right? To
Mhm.
conform to the narrative, the maximum pressure occurs exactly at the turn point.
That's true. And I don't know why that, I don't know of the sort of the collective reason for that. But as individual traders, I'll tell you what though, you have to guard your own and you have to
Hmm.
protect your own sort of the ecosystem and you have to guard the gates.
And you have
So
to
what
fight
comes in
that
and
that
out.
sort of that normal human instinct of wanting to be with the crowd, right? It's hard to be, singled out and standing on your own. But in the market at turns, that's what really makes the difference.
True. And I think, yeah, that's, I mean, look, I think it's a big topic because that conform is something that we're taught early on. And maybe, yeah, I think you're right. It drags into these other spreads and these other things, even in trading,
I mean, think of
even.
it from a primal
Hmm.
standpoint, right?
Hmm.
You didn't want to be cast out from the group because you die.
Hmm. Hmm.
There's a reason wolves stay in packs, right? Because there's strength in the pack, and if you go out on your own, you're more vulnerable. And so
Exactly.
it's like that amygdala stuff, right? The fight or flight thing, right?
Hmm. Hmm.
You're dealing with this base level psychology that you just need to be aware of because it can misdirect you and not even in a conscious way.
Well, I think it's time and place. Some places you need the group, you need to be with the group. Like let's say there's a fire in the neighborhood, you have to
Right.
get together and kind of do the correct thing. But there are other things. But trading is a whole nother planet. You're on your own. No, if you take a loss, nobody's going to come and say, "Oh, here, let me just give you some money to
Let
cover
me
your
help you
losses."
out with
Yeah,
that.
let me. Collective doesn't come to your rescue if you hurt
Right.
yourself.
Right.
And nor are you responsible to give money to the collective if you have a good trade. So everybody's kind of there on their own, and how they distribute that is also up to them. And because of that, I think there's a difference when it comes to trading because you're on your own no matter what. At the end of the day, you click the button, you make the call and you have to manage the risk or whatever you have to do. It's all on the trader's
It's on
shoulders,
you.
on
Yeah.
you. So because of that, I think, kind of like a soldier in the wild, you have to be responsible for your own actions and how you process the data and your situational awareness. And that's the thing, and that's the ongoing discipline. This is probably how I see it because I'm just talking it out,
Yeah.
because nobody really asked, but it's really like watching that as the show. But the thing you can trust is really the work that you've done. And how do you know that? Well, that's why you want to go back and look at the work, your system, and your approach, and see how the numbers add up. And if you're comfortable with the probabilities that your work shows, then you know you can just rely on that. You don't need anything else.
Right.
But like I said, while you're skimming the environment, when I mean, the narrative environment, you can choose to notice the things that would support your stance, that support your work, and then there are other things that don't. Like for example, when the tech companies were putting in highs, and we're like, wow, these cycles are done. We're done growing up.
Yeah.
But gosh, the positive beat kind of persisted for months, weeks, from December, right?
Yeah. I mean, it wasn't going down. Let's put it that way, right?
It wasn't going down because
The
the
averages.
sentiment was kind of there, and the news was always upbeat, mostly.
Hmm.
And I think it just goes to show, yeah, the crowd might not always be right, and at the same time, this is not, you have to sort of cut yourself off from the crowd and understand, like you're on your own. If you make it or you don't make it, it's on your shoulders at the end of the day, and you better discipline yourself and be responsible how you take in information and how you use that information.
I guess
I
it's
mean,
sort of like there's a false sense of comfort with the crowd because, as you said, no one's coming to save you if it's wrong.
right, you're right. Yeah, I think there is a false sense of comfort. And of course, if you're wrong, you can always blame the crowd, like, oh, well, everybody was doing it. You know,
Right.
we all
Right.
thought it was going to go higher, or we all thought it was going to stop here. And then we just, come up with a reason. But I don't think if if you're really making a living trading, you can't have that kind of attitude. You have to just, you know, independent traders have to be on their own. There's no question. And you guys, I'd love to hear from you guys because a lot of the people that are watching this are independent traders, and it's a whole nother breed, and you have to have that discipline not to be swayed by, well, outside narratives,
Yeah.
and have the confidence and the trust to with your work. And not that somebody's work is going to be right all the time, but you if you stick with it, your probabilities of your system of winning are higher. So you have to stay with that.
Yeah.
And the
And I
news
think
will agree or not agree over time, and that's just the ebb and flow of the news cycle.
absolutely. And I think this is part of the our ongoing effort to talk at the end of these shows about, the psychology of trading and the mindset that you need to have and how you have to sort of think to at least put yourself in a position to be successful. I mean, some of the books we have are that we talk about um, are
Like the disciplined trader.
The Disciplined Trader.
Mhm.
The Mark Douglas has great books. The one that I found was really really impactful was Trading in the Zone.
Mhm.
It helps you how to approach the market, how to think about your trading. There's one that was non-trading that I really liked was by Annie Duke. It was called Thinking in Bets. It's basically all about probabilistic thinking.
No.
She was like a world-class poker player, and that
Mhm.
and she had degrees in psychology and everything, and it's sort of understanding that over time, if you have a system that's successful, you'll win. You don't know on any one hand or any one trade whether or not you're going to win, but you have to follow the system. So it's the
Exactly.
same principles as Mark Douglas brings up in Trading
Mhm.
in the Zone and Disciplined Trader. I think feeding your mind with those kinds of things helps you get away from the traps of that we're discussing of like, oh, you follow the narrative, or you don't follow your system because you think it's going to be wrong, or you're second guessing your system, and all this sort of self-destructive behavior that can happen in trading. And because you can be your own worst enemy in trading if you get into your head and let these sort of negative and non-productive thoughts govern your actions, because they will affect your actions. There's no question
Yeah.
about it. We've all experienced it.
And it comes down to discipline. It's sort of like, the metaphor of the garden. If you don't manage it, then the weeds are going to take over at some point. And the
Mhm.
conditioning is like that. We have these narratives especially with all this, all the communications we have now and the threads and the news boxes and you know what I mean? There's
Yeah.
so much news coming at you. If you don't really have a way to sort of bypass that without having to absorb everything, like we're told, I think there's another habit where people think, you have to hear everything, and somehow that's going to help you make a decision. And the funny thing, I think, is getting a little bit out of the topic, but over the last dozen years or a couple dozen years, ever since the bull market, probably 82 bull market, right?
Mhm.
Starting there, there's been easy money most of the time, and people just throw money in and the market keeps going up. So that's a lot of conditioning. It's almost a generation of conditioning to just, oh yeah, just put the money in, everything works, and it doesn't go on. So you have to always be on the guard for that. But you can't do that at the mental level. That's what I keep saying. You can't.
It has to
It's,
be at the system level.
at the system level, yeah, because we're not that robotic to be able to just continually uh, be able to take in news and somehow, like AI, and make a decision, right? Crunch
Right.
through billions of pieces of info. So much easier to just look at your trend lines and your squares and the patterns and go study the markets that you're trading and
Right.
understand how they move and understand the technical side and get really grounded in it. Then, let all the noise go by in the news, and you'll know what to choose and what not to choose and what to pay attention to. Because at the end of the day, you have to be responsible. It's your money, and news is not gonna, load your account.
No,
So
no. Following your system and executing your system correctly is what
it
does it.
always comes back to that, no matter what, because that's your sort of the guarantee of survival.
Hmm.
And that's why you need to spend a lot of time learning how to do that. And part of why we do the show the way we do, instead of just saying buy here, sell here, which is a whole other category of information, is just
Right.
to say, look, you can really think for yourself and figure out things for yourself and trade and be profitable and to be able to exploit whatever sort of the edge that you have.
Amen to
Yeah.
that. Amen to that.
Amen.
Yeah. So listen, it's we really appreciate the support you guys give us. Please share the link with your friends and people that you think would find it interesting. Subscribe to the channel, like, and do all the things that YouTube asks us to get you to do. That we would really appreciate
Mhm.
that. And again, it's the weekend. Rest up. Had a big week volatility wise this week. Do not expect that to change much in the coming weeks. So rest up, know your levels, study your charts, and be ready to go. And we'll see you next week.
Good job, Ben. We'll see you soon.
All right.
Maybe we'll do a midweek next week and catch
Yeah,
up.
we'll see. Depending how stuff goes, maybe
We've had a lot of
we'll
requests for different markets, so maybe we can do midweek and do some of those, like some of the forex markets and whatnot. So we'll see.
sounds great.
All right.
Take
Have a
care,
great weekend.
everybody.
Bye bye.
Bye.